Hello everybody. So today we're gonna talk about the Opendoor IPO. As you know, Chamath Palihapitiya has did a SPAC merger with Opendoor by around $5 billion valuation, and on 2019 they did about $4.7 billion revenue. So that's about 1 time sales multiple. To start off, I'm gonna tell you a little bit about Opendoor. Opendoor is basically like a real estate remodel company. It's basically like that. So they buy the house from you if you want to sell, so you don't have to sell the house, wait, like so potential buyer house or anything. They close fast, so you can move out quick and get the money quick. And so usually like when you try to sell a house, it will take 3 months. But if you sell it to Opendoor, it will only take the fastest. It will be 3 days. So you get the money quick. It's type of situation that you will get and sell the house to them real quick, and then they do some remodel and flip the house and do some remodel and put the house back on the market for sale. So it's basically like a flipper, somewhere around a flipper or a reseller type of company. That's how I look at it. I don't know if I uh, describe it correctly or not. And the first thing I want to really talk about is the business is just not very profitable, and it's gonna be very challenging for them to make money. So their gross margin on every house they sell is 4%, which is extremely low. And I think it'd be a better idea if I just put my money on a high interest CD account and I will get 2 or 3%. It's basically the same, and you put in all that much work and you only get 4% gross margin. For example, a software company they will get usually 60 or 70%, so it'd be like 20 times more profitable. So if it grows more than 4%, that means every dollar of revenue you bring, every $100 of revenue you bring in, you only make $4. But for like software company like Facebook or Slack, or I cannot think of any other ones, but they are like 50 or 60% gross margin. What that means is that for every $100 of revenue or sales they make $50. So it's at least 10 times worse. And I just don't really see how why would anyone try to make a 4% gross margin when you can just put all that billions of dollars on a CD account, get your 4% gross margin. And I understand the Chamath's vision that you could when you buy a house you can expand into other side business such as escrow, title, and insurance and anything like that. But those are not very profitable as well when you try to do a $300,000 house and only make two or three 5,000. Let me see. I think they broke down those like home loan generation. 5,000 they can only make escrow and title. So on a $300,000 house, escrow and title only they'll try to make $1,750. So I don't think it's a hugely profitable business like that. And but like if you want to do like escrow, like try to like digitalize or revolutionize the market on title escrow, I think it'd be better if you just go directly to start a title and escrow company and do the service on that part. And they're also like trying to be launched. They are trying to launch like home warranty, upgrade, remodel, home insurance, moving service, and something like that. And they can make like $7,000 on those. So just start a home warranty company or home insurance company, why would they go into the home flipper business? I just don't think it's very profitable. I think is this Opendoor is the least the most unprofitable company you can go into, because it's similar than it's very similar than putting your money on a high CD interest rate account or putting your money on a stock market that pays around 4%. I think you do better if you just put your money on a stock that pays 5% or 4% dividend. And you can also argue the fact that in the long term they can grow their gross margin. Well, when I do the research, it says that their long-term gross margin for a house they try to sell is 7%, and I just think it's very challenging, because this stock grow and become a $50 billion company in the next 10 years. Yes, it could, but I just don't like buying a business like that. It could based on they could expand to multiple venture or business, many startup, escrow startup, insurance startup, that companies, or expand sell the business. That's buying house is the main product that attracts other business. So I just to summarize, I just don't really like that business. If Chamath can, hopefully they can do some more interview and explain to me why would anyone go into a such low margin business. But I could be wrong about this because I'm not a financial advisor. So I just try to give you my thought and my research on that company. Thank you so much. And please don't forget to like and subscribe.